ठीक है.
Nakul, just
I'll
remember
manage.
that I can't hear Prachi, so you'll have to manage that. Huh? Go
हाँ
ahead.
हाँ,
Sorry.
प्राची सिर्फ इंट्रोडक्शन करके चली जाएगी. एंड में Q&A मैं मैनेज कर लूंगा या फिर वो आ जाएगा स्क्रीन पे भी.
हाँ,
ठीक है.
you ask
Okay,
me.
so we are
ठीक है.
live now.
Cool.
या वी आर गोइंग लाइव.
Okay. Good evening, everyone. A warm welcome to all of you at today's session. Myself, Prachi Negi from CA Sansaar. Today is the 13th day of ongoing 14 days webinar MahaKumbh, which is started from 14 November 7 p.m. onwards live on YouTube. Today's session will be taken by CA Nakul Saluja ji and Mr. Utsav Pathak ji on the topic Fundamentals on Startup. If we talk about Nakul ji is a chartered accountant and a certified fraud examiner with over a decade of rich and diverse experience working in the finance, strategy, and governance risk compliance domains globally. He is currently the managing partner at Tri Diligence Consulting LLP, a multidisciplinary consulting firm with startup consulting and advisory as one its core practice areas, providing specialized service in the key areas of pitch desk development, financial modeling and valuation, technology and applications development, digital marketing, cybersecurity, and education and training. If we talk about Utsav ji is an artificial intelligence, robotics, financial technology enthusiast who firmly believes that in a world dominated by technology, people must remain at the center of organization and society. And academic is the key to helping individuals adapt and thrive within our fast-paced world, in particular the rapidly developing artificial general intelligence world. He is working with Wealth Management Department of Standard Chartered and has submitted a proposition robotics in wealth management to innovation arm of his firm SC Ventures Singapore, which was shortlisted and was nominated for Dragon's Den. He also featured in Top 100 Economic Times Young Leaders Program. Now I request Nakul ji to please start his deliberation. Over to you, sir.
Thank you so much, Prachi. Thank you.
Prachi.
A very warm welcome and good evening to one and all, to all the respected fraternity members and the viewers who have tuned in. And a big thank you to the CA Sansaar team and especially Vivek Khurana ji for giving us this opportunity to host this webinar on a very exciting topic of startup fundamentals. To begin, I'd just like to set a little bit of context. Startup has become a key word, a key buzzword over the past many years. But through this webinar, we'll just try to demystify certain myths and look at some certain fundamentals which you need, and critical fundamentals which actually help build a startup. So I'll just begin with with to understand what exactly what the startup is. And throughout this session I'll be accompanied with my co-host and co-presenter and also a colleague now, Utsav Pathak. So we'll try to keep this session interactive, and we'll also
Sure.
try to keep it very practical. So we'll be sharing our knowledge and experience which we've gained, the learnings which we've gained through our own personal experience working with various companies and startups. For example, I've had the opportunity to work for a lot of startups. Once I graduated as a chartered accountant, my very first job was with Jabong, and along the way I worked with several startups. Another noteworthy startup being Ecom Express, where I was involved in the corporate development team, or financial strategy team, developing financial models and pitch deck for them, along with the under the guidance of top management and founders directly. And we managed to secure funding from a major leading PE firm, Warburg Pincus. It was a Series B funding. So from my experience, my personal experience working with various startups, and also working with various startup clients now, because now I'm managing my own firm. These learnings I'll try to kind of share it with you through this session, and we'll keep it interactive. Utsav is also an industry leader working in the wealth management space. He's worked with various top financial and banking organizations, and along the way we'll kind of try to connect the fundamentals that we'll share with you to a practical life project that we both are actually working in, and we'll strive to make it very practical, engaging, and we'll try to relate what we are kind of sharing to a live project that we're working on. So with these words, without much ado, I'll just begin with the session. And of course, the first question being, what exactly is a startup? So, what is a startup? If I may, startup is just another. It's just another business, and the difference between a startup and a normal business or a family business is just very subtle, and it is also huge in one sense. So, taking this example of a tea stall, so we have our Nukkad favorite Nukkad tea walas, and we have Chayos and Starbucks on the other side. So, what exactly is the difference between these two? Things, these two businesses selling a very similar product? The answer is here. So answer lies in these four major aspects, which is first of all innovation. So our favorite Nukkad chai wala is actually not innovating. He's just using an existing model of engaging with a local clientele, his patrons who visit the Nukkad chai wala, and he's not even ambitious and looking at kind of scaling it up. But on the other hand, Chayos actually took the same product and used innovation and used a novel business approach to kind of develop this business, and with an ambition to have scalability and breakneck growth. So the second aspect, so innovation is one aspect, like I said. Second is priority. What is the priority of a Nukkad Chaiwala? It is profitability. He wants to look at cash coming in every day, whereas Chayos, might have burnt a lot of cash initially because they are aiming at breakneck growth. So the difference in essence is again the vision, how the business is envisioned and how you are implementing the idea, what's the business model is, and where you wanting to take the business to the next level, scale it up, or you're happy catering to a certain clients in a limited geography or your area of competence. So innovation, priority, scalability is very limited. For a Nukkar chai wala, whereas Chayos is looking at very high scalability. And the last difference is of course funding, which is one of the title words that we've used for this presentation, but not necessarily we want to focus there, because of course Nukkar chai wala is funded by self, by a family, or taken a small loan from private loan from someone, whereas a startup like Chayos might be looking at angel investors, institutional investors, venture capitalists, etc. Here I'm obliged to tell you that not all startups, even if they are using a very innovative, novel business idea, looking at scalability, breakneck growth, uh, and they some of them, I've met certain founders and great startups who are not looking to get funded by angel investors. They want to grow organically. So there's a trade-off always in terms of they don't want to give up too much control, and they want to run the business you know through a strategy that they have developed, through a vision that they are actually looking at for the business. Because once you take funding from any investor, they come on board, they are part of the team, and it becomes a different set of management professionals looking at the same business. So it's a trade off. Not all startups are looking at funding, but of course if you're looking at looking at exponential growth and scalability, you would need external funding at some point in time. So that is another major difference between a normal business, a family business, and a startup. So startup is nothing but a term that is used in the industry to represent these innovative new businesses who are aiming at very high scalability and growth. And to fuel that growth, they look for institutional funding, because angel investors and venture capitalists just not give you funding and cash for growth, but also bring in a lot of smart capital, their experience. They unlock a lot of connects. So here, Utsav, from your experience, if you would like to kind of add something here, or share your perspective on the difference between a normal business and a startup, and uh, these very
Yeah, sure,
critical
Nakul.
aspects.
Hi, Prachi. Hi, Nakul. Many thanks for having me. In the rightness of things, I would like to thank Prachi and her team for organizing this event. Nakul, in the rightness of things, I should also congratulate you for doing very, in your own space. Tri Diligence has done very good work in its own space, and has, being a value creator for various organization at various levels. So yeah, I mean, I have known Nakul for some time now, and we, I was. I will give a brief introduction about myself. I worked with wealth management arm of three firms, and having worked with them, I identified that there are inefficiencies within the system which can be plugged in by bringing in technology and leveraging on technology. I identified that as a part of wealth management, there's always a certain bias which stays when a wealth advisor or an investment advisor is pitching in a proposition to various clients, institutional or individuals. Having said that, what I realized with time, that what clients generally look for is unbiased advisory, and that is where I came up with the idea of robotics and wealth management. Now, having said that, I was looking for a service provider who can, who has the industry experience, who can leverage on their industry experience, and at the same time, give an unbiased advice that how we can scale up the proposition. Having worked, going by the word of mouth, I was referred by someone to Nakul, who is an industry expert in his own domain. So we connected beyond the scope of startup advisory, and I pitched him the idea that this is the idea in robotics and wealth management what I'm looking for, and how you and your team can leverage your expertise in order to scale up our proposition. So at that point in time, Nakul was intrigued and excited to hear my proposition, and he said that he would want to join me as a co-founder, and leverage upon his skill sets in order to scale up my proposition. Now, having said that, we work together on creating a pitch deck and a business valuation model, so that as a part of go forward plan, when we pitch it to various angel investors or institutions, we know what we're looking for, the kind of money that we want as a part of scalability. As you will understand and appreciate, when I said that our proposition, robotics and wealth management, is we would need funding. We looked at funding of $1.5 million to $2.0 million, which is 10 to 15 crore, because it will be driven by robotics, and AI algorithms will come into play. So a funding of this nature will be required in order to scale up the idea. Nakul and his team prepared a valuation model basis which we pitched it to various angel investors, and I also pitched it to the innovation arm of my firm, which also happens to be one of the key milestones in the journey of our proposition. It was we got nominated for Dragon's Den, and at the same time, as we speak, it stands at the funding stage. So we have been our own cheerleaders as far as the funding proposition is concerned. So yeah, Nakul, I'm just echoing the sentiments as rightly pointed out by you, that what has been my experience. I believe as a service provider, one needs a partner who shares the same vision, who shares the same excitement, who aligns with your skill sets, so that synergies can develop and we can scale up the proposition. I was wondering if that answers your question.
Absolutely, Utsav. And thank you for the encouraging words. And it's
Of
been a
course.
pleasure to actually join you along this journey. So, like we said, that we will keep it very practical and engaging. So, this is coming from our own personal experience and current project that we are working on. So, apart from
Right.
working with various startups, I've worked with various startups as an employee, and then
Right.
since I started my own firm and advisory, I've worked with several startups as clients. And
Right.
somewhere down the line, certain startups do come your way, that you are so intrigued that you are wanting to join the project itself. So that's what happened with Utsav's projects Robofolio, and we'll keep coming back to Robofolio as a live example to connect what we
Right.
are kind of the fundamentals that we are sharing here, the concepts that we're sharing here. We'll try to keep connecting it with a live project example that we are working in, and
Sure.
how our journey has been till now, how our traction has been till now, and what are the next steps, because we still are in the process. It's still a work in progress. So it will be
Of
great to
course.
to come from that background and keep connecting as we share the concepts here. So
Right.
I'll move on, and like Utsav mentioned, how any startup actually or business starts to form from the ground up. First of all, you come across a problem set. A problem set, you can actually come across through your own experience, working, in and interacting with the society, working in at a particular industry or a particular company. You come across a problem set that, that problem, there's a gap that has not been filled. There is no solution to that problem, or maybe there is a service or, a solution to that problem, but that is not being done in a very good manner or very efficient manner, and you feel that you can come up with a new solution. And maybe,
A better
a
proposition.
third way. Yes. So the birth of a organization or a startup comes from a problem that you face,
Right.
or, in very rare cases, a staggering opportunity that you come across. There's been a change in the ecosystem, or, certain opportunity has come across, and you happen to be working in an industry or in a setup where you have a competitive advantage of leveraging that opportunity because you have an insight, you have experience there. So that is another way that you can come across with an idea to start your own startup. So that, the initial way, 80% of the best startups come, get started when you face a personal problem in your personal life. So, our research shows that, 75 to 80% of the startups have, the unicorn startups or the most successful startups have come up with ideas, problem sets, which the founders themselves have faced, or the gaps that, they have faced themselves. So here, Utsav, going back to your live example, Robofolio, a startup that you're working on, what kind of problem set, you come across, or opportunity did you come across, and what is the solution or the product and service that you're working on? So we can, I can probably invite you here to, shed some light on this, and then connect it to the concept that we're sharing here. So, just to reiterate, we come across a problem set, and then we try to provide a solution to that problem set, or a gap in the existing, solution, or leveraging an opportunity that has come across. And how do we present this solution? We present that solution, through a product and service. So, Utsav,
Right.
over to you.
Sure. Sure, Nakul. Thank you. See, as I said, that I've worked with three odd wealth management firms, and also spoken to various clients in my career span of 13 odd years. Now, having said that, I realized that many of the clients, they say that the investment advisors or bank, they continue to pitch an idea or a proposition which they deem necessary, and at times not understanding the client's needs holistically. Right now, having said that, the idea and intent was the underlying sentiment which I realized in during the course of my career span, that they are actually vouching for one thing, which is there is every time an idea or an investment solution is being pitched, it is biased. While no matter how much they say that it is aligned with their risk their risk profiling, and at the same time, which fulfills the investment criteria of the client. Now, having said that, the underlying sentiment, as I said, was biased. I realized that it is very important for as an institution to come up with a solution which is unbiased. Now, how do you take how do you hedge that proposition? How do you hedge that risk? The only way to go about it was to 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 align it with AI algorithms and robotics, where the wealth management space is moving. In many of the developed markets, robo advisory or robo wealth advisory has been there for some time now. Now, India being a regulated market where financial literacy stands at less than 5%, which is 5 crore population, not even 5 crore population invest directly or indirectly as a part of in stock markets, right? Whereas when you compare that with a mature developed market like US, where more than 55% of people invest in stock market directly or indirectly. So, 5 crore of our people as compared to US population being 35 odd crores, so more than 55% people investing in stock market. So that's 17 crores of population. So all I'm trying to say is that, in India, one of the wealth creators has been the stock market. So if you invest in quality business, your money will grow over a period of time. So, but for that to happen, it is very important to invest in ideas, which gives you, invest in ideas where the client deem necessary, which are aligned with their risk profiling, and at the same time create money in the process. So the sentiment of buyers needed to be taken away. So I realized that it is about time for the India market to come up with robo advisory, wherein the AI algorithms along with robo advisory works in tandem, and give an investment solution to a client which is very much aligned with his needs. So that was the problem area and the solution which I came up with. Now, as I said, as you rightly pointed out, the product or service. So we are looking at investment from various angel investors or the other VC firms who can invest money in our proposition, so that we can build and create infrastructure which will give that kind of solution to the clients, which will be suited for their requirement. Does that answer your question, Nakul?
Right, right, Utsav. So thank you so much. So our viewers can appreciate. So those were the challenges or the problems that
Of
Utsav,
course.
being a wealth manager professional, working with these financial institutions and banking institutions, witnessed firsthand. So he saw that there was a problem of bias. People, the institutions could not be unbiased, and then another problem that Utsav came across was the problem of access. Wealth management advisory is very critical for everyone, even young executives who just started their professional journey, wanting to save and invest the right way. But that kind of professional and high quality wealth management advisory was not easily accessible to everyone. Like Utsav is working in top financial institutions, and only a few people were privileged enough to have accounts with institutions like Standard Chartered, and leverage their expertise in advisory. So to lower down these hurdles, and to tackle the problem of access, so that everyone can have access as well as unbiased, highest quality wealth advisory, that was the problem set, and against which solutions Utsav was finding. And so like Utsav said, he's working on those problem sets. He's looking at solving that problem through an AI based robo advisory based product that he's working on. So it's an application, it's a web platform wherein these challenges will be tackled, and robo advisory as a service will be provided to one and all, people who are wanting to take this
Absolutely.
service, and also generating that kind of awareness and education around the importance of savings, and right kind of risk assessment and wealth advisory. That is the space that Utsav is looking to find problems statements and solutions to. So you always need to be very passionate about the problem that you're facing, and also passionate about the providing a new solution, an innovative solution, to tackle those problems. So that is the approach one starts with, and that's how Utsav got started. So carrying on with our journey. So just before we carry on, ultimately we want to actually articulate our business model, and send the message out to the users, to the investors, and the best way to do is through a great story. So we will actually approach this session through a storytelling format as well. So as you see that I'm introducing concepts, and we are trying to stitch it to a live project that Utsav and I are working on, and to kind of reiterate those concepts with some live example and live project. So the first steps. So what are the first steps when Utsav came across these problem statements? What are the first steps he wanted to take? Or anyone who's looking to start a startup has come across a problem statement, and is very passionate about coming up with a solution, either a new novel solution that doesn't exist in the market, or there might be solutions or services in the market, but they are not presenting a very value added kind of an approach, or very very they're not being done in the right manner, and you feel passionate about coming up with a better way of doing the same thing. So the first thing is, I cannot stress that enough. We see a lot of young entrepreneurs, tech entrepreneurs, coming to us with just concepts on pitch deck, with no product or service. So we first of all, we tell them to go back, and go back to the drawing board, and first do a lot of brainstorming, and conceptualize your product first, and develop at least an MVP, another being another buzzword, is a minimum viable product. So you don't need to build in all the product features of the solution that you're trying to build, but you need to build core minimum feasible features, and get a product and get it out there for people to see, to adopt, to recommend. And the first, as soon as you see that people are actually reacting to it, they are actually trying to use it, that will be a first validation of product market fit, PMF. So along the way we'll also be kind of introducing these buzzwords. So MVP, we've kind of addressed that, the minimum viable product. As soon as you are building any product or service, you need to work on a minimum viable product. Make a product with those core features and get it out there soon enough, and get it out there to the right audience. Maybe your professional network is the best place to begin. And you immediately get, if you're able to get those adopters who start using your product, or start giving you feedback and start recommending, if they start recommending it to other people in their network, that is your first validation of product market fit, and that's your first big win. And if you don't get users, you get a feedback, live feedback, that you need to go back and work on your product or service. Maybe the model is not right, maybe you're not able to communicate it the way you want, or maybe the users want something different. So you get a live feedback and initial feedback before you spend a lot on your MVP. So don't spend a lot on your MVP, just core features to be built in, get it out to your immediate network, get recommendations from them, or adoption from them, or a feedback from them. This is your first validation of PMF mean product market fit. And while you are actually sharing your product, these are the critical aspects and elements for any of your verbal pitch that you're using to communicate what you're doing. You need to show clear thinking of the problem statement, the solution statement, and the product. And also you need to also articulate what is the big need behind providing this solution. Once you do that, your audience, be it your audience or be it your investors, they really you're able to grab their attention, and they're able to appreciate and recognize that the founders have clear thinking, they know what they're doing, and there's a big need that they're trying to solve. And cherry on top is, the bonus is, if you are working on a problem statement and a solution in a market that is looking to grow exponentially, a real trend is developing. Not just, TAM is another buzzword, which is total addressable market. Not just, a addressable market today in terms of figures, but these market leaders, industry experts can actually see that there is a new trend that is developing. For example, after corona, we faced corona, a few new trends have actually developed for the long run. And people who have been smart enough or open enough to grab these opportunities, and come up with solutions to the problems being faced by humanity over the last couple of years, they've really they've gotten attention of market leaders, they've gotten attention of venture capitalists, and of many startups have got the smart capital that they needed. So this is the first step that you need to take while you're developing your product and service. Like Utsav mentioned, that he's working on his product while addressing to the problems of access and bias. So Utsav, you want to add something here while you're developing working on your own MVP right now?
Yeah, Nakul, hi. Nakul, I wanted to add on to what you said. I believe it is very important to have the first mover advantage. Preparing an MVP is very important, so that it gives, while you're preparing an MVP, it also helps you to get a clear line of thinking that how you want your proposition to shape up, right? It gives a certain structure, it gives a shape, and it knows, it helps to give, you are able to jot down your thoughts pen to paper, that what would be the right approach on how, what's your vision for the proposition all about. So it also, while you're preparing MVP and then you start to circulate it in your network, you realize that what is their feedback, what is the other people's feedback, and how, because you're addressing a market which happens to be an age group of 7 to 70, let's just say that total addressable market, as you rightly said. Supposedly, I'm not talking about robo advisory per se. I'm just opening up the market overall for any proposition to grow. So if we are supposedly saying that the proposition happens to be in 7 to 70, and every person's understanding or needs from a particular proposition is different. So you need to, while you have a certain vision for your proposition, but at the end of the day is the consumer will decide whether they want to avail the services of this particular proposition, yes or no. There is no gray area. So what I'm essentially trying to say is that once you have an MVP, which your first final draft, then you reach out to the various market in the addressable market, and then you interview them and you take their feedback to see that whether it is a fit in or whether it is not required. Then you go back to your drawing board, your whiteboard, you make a note of all their feedback and start addressing every figuring out solutions for every inefficiency as being highlighted, or an observation or a clarification which is being highlighted by various feedback which is required. Then you prepare a next MVP, which is a much better model, much enhanced model, and by then you have also grown as a professional in your journey, right? Then after that, you come up with a better draft or MVP, and this time around, you're a lot better prepared to address your total addressable market. So you're able to market size it better. You're able to appreciate the inefficiencies which you have highlighted as your previous while you drafted the previous MVP. And in your journey, you will see that how much you have grown and evolved as a professional, right? You'll be able to appreciate the journey a lot more. You'll be able to appreciate the different line of thinking and different what is you'll be able to get into the consumer's mindset, and at the same time, the how you can address
Right.
those needs in a better way. So I guess that's it's a preparing an MVP is a very important what do you call it, stepping stone in order to address the requirements for your market. And even as a part of our my journey, Robofolio, as you rightly mentioned, we started with a plain ground that what could be the possible requirements for the clients. Then we prepared a MVP, a first draft of MVP, thinking what we know best is suited for them. Then after, when we circulated in our network, we realized, and when we went to reach out to them individually and collectively, we we collected feedback at every step of the way to understand what are they looking for, and then collected the feedback, came back to our drawing board, started afresh, and then started addressing every feedback point one at a time. We prepared various solutions that how we can address it in a better way. We spoke to a lot of people in the industry to understand that how we can how they look at it differently. Then we collected all the feedback, prepared a better MVP model, and circulated that in our network. And you know what, the in the course of the journey, I believe I changed as a professional. uh, I was able to think a lot clearer. It gave me a certain vision of the proposition. I believe that's one of the reasons why our proposition Robofolio was nominated for Dragon's Den. And at the same time, it got a lot of positive feedback and encouragement from a lot of angel investors and venture capitalists in the process. They have given us feedback which we duly appreciate, and which we plan to incorporate in the next phase of our milestone.
Right.
So I'm just coming
Right.
back, circling back to you, that what are your thoughts, what are your views as far as what I said? Would you like to add something?
Right. No, thank you so much, Utsav. So I think that's the point that we wanted to make, how important MVP
Super.
is and how important it is to work on the MVP. And of course, one of the advantages is the first mover advantage, as Utsav mentioned. But don't be discouraged if you have competition already, and if then probably take other projects as proof of concept. And the
Right.
actual edge in any startup lies in implementation. Any
Super.
idea that you've thought of, or they say that somebody has already thought of, or is already thinking right now somewhere in the world. But the edge that you have is actually implementation. How good as a team you are, how passionate as a team you are, and how good an implementation, that implementation plan and actual implementation you are doing about it. So that is your edge. But the point that we wanted to drive home is, you need to work on your product or service, work on conceptualizing your product or service, and don't just be a concept on paper. So this is the point that we have worked. So we are actually discussing the first steps. So just coming back to the first step, that is you need to really work on your product and service. And the second most critical step is building the core team. So you need to build the first equity stakeholders, the stakeholders and the co-founders of your company, because you cannot do it alone. There are very rare circumstances where and somebody has actually developed something entirely on their own and taken it to the next level entirely on their own. It is always a team effort. It's a team game, and you need to develop the core team. And the first co-founders that you're able to recruit or bring in, those are your first investors, because they're investing your time and skills in you. And those are the first validators of your idea. Because if I heard Utsav's idea, and being a professional, I could have actually devoted my time elsewhere as well. But if I wanted to actually join him in this journey, and he also accepts my proposition, so that is the first validation for him, as well as for me, that as a professional, I was he wanted me to be part of the team. And for him as well, because that is the first validation that professionals in the industry, professionals with know-how, are wanting to be part of your idea. So you need to create a core team. You need to, so the elements of a core team, you need to have an evangelist in your team, a CEO. Evangelist meaning a person who is actually very passionate about the product or service, like in our case Utsav is, and who's actually wanting to talk about it all the time, and talking to various stakeholders, wants to get our message across to the world. So that is the kind of person that you need as a CEO or an evangelist. You also need a if it's a tech startup that you're working on, or an idea you're working on, you also need to get a co-founder, CTO in your team. You don't want to just keep outsourcing it. Getting a good co-founder, CTO is another essential element that you must be looking at as a when you're developing your own startup. And your other these are the other attributes of co-founders that you need to assess while you're recruiting co-founders as part of your initial core team. So they should be aligned, of course, with your vision and be confident about your future model. They should be idea generators and solution finders and owners, meaning they own the responsibility. Also, they own ownership in the company. They are not working for fees or other monetary benefits right now. They are actually wanting to become equity holders in your startup. They should be action oriented. And of course, I said those are the first stakeholders. So this is an essential first step. While you're working on your core product, you need to start building your team as well as you're working on your product and your service. Anything to add here, Utsav? Your thoughts on this?
No, no, Nakul, as you rightly said, it is very, very important to have a core team in place. It is very important that to have people who strongly believe in the philosophy of your idea. It is
Correct.
very important that they have different and varied skill sets, because if they have same skill sets, then they don't need one another. There is no better way to say this. If they have
Correct.
varied skill sets, however, they align on a particular idea, they so that it is very easy for synergies to develop, right? If you
Correct.
feel strongly about it and the team grows on its own, they feel strongly about it, you will see that you're not working on the idea, it's all fun and play. So the results will be a lot better than what you it is actually better than expected. So I believe the core team actually brings in different viewpoints, they bring in different skill sets, and one can actually leverage on those different skill sets and differences of opinion to bring about a meaningful change in order to create a proposition which is what the market needs. In fact, it could be ahead of its time. So that was one of the philosophy, that was one of the reasons why we wanted where we aligned as colleagues and on this particular idea, that you felt
Right.
strongly about it. And me being a part of the industry, having spent more than a decade in the industry, wanted to leverage on my skill set and identify the inefficiencies which are already there as a part of the system, and at the same time bring about a meaningful change. What I believe, what both of us aligned on, that this is going to be the future of the wealth management industry and wealth technology industry, where AI and robotics play a very important role in order to give a unbiased solution, investment wealth solution advisory to clients who are at various income levels. As you again you pointed out, one of the inefficiencies, that wealth advisory is generally being it is generally looked upon as somebody who only top the income, the well-off customers can actually afford those services. So we want
Right.
this service to be accessible to all, because wealth creation is an important stepping stone in your life's journey. So we wanted to do bring something which is unbiased, and at the same time, what is required as a part of go forward plan, not just in this markets but various other markets across the globe. I believe, as you rightly said, that the team plays a very important role, and I would like to believe that you having as our service provider has only added and created value at every step of the way. I believe we this CIO, Chief Technology Officer, plays a very important role, because it is very important for someone to understand and appreciate how we can leverage on technology in order to create value in a particular proposition. And as a part of Robofolio, I believe, as I said, robotics and AI, those are very fancy terms which are not very much used in our part of the world. So a CTO will be a very important role to play, who can leverage on his skill sets in order to add and create value as a part of our proposition. So Nakul, I believe, as a service provider,
Right.
as one of the team partners, as one of the business associates, Robofolio is lucky to have you and your team to be there at every step of the way. I was wondering if that answers your question.
Thanks, Utsav. It does. It does. So coming back to the first steps, Utsav, that we are actually sharing. So first steps again. I'll reiterate: product or service, building the core team, and then the most critical of the steps is to focus on, because now you're working on your product. You have a product and service going. You have built a core team, and now you want to focus on momentum and traction. So what are the, we keep hearing about the traction, but what exactly is traction? So traction basically can be of two types. The best type of traction is revenue traction, that you are able to get users, paying users. So that is the best kind of validation for anyone, for any, for any kind of venture capitalist or funder, that you are, if you're looking to seek fund, raise funds. So that is the best kind of traction for yourself, or as for any kind of investor, because then you have users who are actually wanting to, or are ready to pay to avail your product or service. So that is the best kind of traction. But there's a catch 22 situation here. Without funding, very rarely startups are able to get to that point in developing their product or service, that they that their users start paying for the services. So most of them start off with a very, like we said, MVP. They've offered some MVP, and it's a free kind of a model, premium kind of a model, wherein first 6 months or 1 year is kind of free to use. So there's no actual revenue, but then the key metrics to look at is users. So how many users or subscribers, or whatever your business model is, it is, whether it is B2C or B2B, etc. If it is B2B, how many enterprises have signed, are looking to sign up with you, or how many enterprises have actually taken your trial product and they're using it, they've implemented it as a trial product. If it is B2C, then how many users, that is an important metrics. How many users month over month are subscribing to your channel, or you're downloading your app. You have to devise those kind of metrics, and look at the right kind of metrics to see, are users engaging with you, are users appreciating your product, are adopting your product. So that is the traction that any funder, or even you as a founder, should be looking at, if it's not revenue. So, these were the most important first steps that you need to take while building your startup. And now we want to highlight a few important aspects to dwell within before you start reaching out for funding. So, coming back to the storyline. So Utsav came up with an idea. He's working on the solution and product. He has been able to build a core team, and now he's focusing on momentum and traction. And by traction here, he's actually looking at getting users, the right kind of users. He's developing right kind of metrics. By metrics, I mean it could be monthly recurring revenue, or it could be monthly recurring subscribers, number of subscribers increasing month over month or quarter over quarter. So you need to figure out the right kind of metrics for your startup, and they should be very practical in terms of conveying the message that your business or your product is actually gaining traction. And it's just not a, you don't want metrics like which don't add any value to your proposition. For example, I can't say that I have 1000 users in the first 1000 people visiting my website in the first month, and then 10,000 in the next month, and then 20,000 in the next month. But in terms of registrations, I am not showing any growth. So that metrics carries no value. You need to figure out the right metrics for your kind of business, for your kind of product, and then focus on getting that traction. And without traction, I can't stress this enough. Without traction, it's very difficult to raise any kind of funds through any institutional or kind of matured investors. So now we've done all this, and now we wanting to reach out to investors for to get funding for our very important project. We are very passionate about this project, and we are looking to raise funds for this project. So what do we do now? So there are a few important aspects to work on still before you reach out to the investors, and those are: first of all, you should create a very basic sensible business plan. You don't need to create a very elaborated 50-page document for yourself. You can actually google it online. You can google business plan canvas, and you'll see a different elements of businesses being laid down before you. And this is an eye opening document for you and your team. As you start filling it up, you'll get to see different elements of your business and how they connect with each other to define your unique value proposition, to define your business models, how you will be working, how you will be developing your business channels, how you'll be addressing your markets, what is your solution, what is the existing alternatives, what are the key metrics that you should be looking at, what are your revenue streams, what are your cost structures, etc. So all these elements will be laid down before you, and it will be an eye opening kind of an exercise for you and your team, because there might be certain dimensions and elements you might have not even thought of. So create for yourself a strategic document, a business plan document, and you can all google it, a business plan canvas, a very simple document, and then start filling it up. It will open your eyes to critical aspects of business. And I'll just very quickly mention these critical aspects so that we can talk about them later on while wrapping up this session. First of all, like we mentioned, that you'll be looking at your problem statement. So you should be able to define your problem statement well. You should know the solution that you're trying to come up with. You should know the existing alternatives, if at all, in the market. And of course, while you're working on your solution, you need to develop the key metrics to measure the progress. On the other side, of course, your solution is always geared towards your customers. You are solving problem for someone. Who are those people you're looking to solve problems for? So those are your target market customer segments. You need to segment your customers. You need to be able to define who exactly in this larger market are your customers, who are the personas that you are looking at, and who will among them you need to further segment and analyze who will be the early adopters, meaning the product or service that you're offering, who will the people more likely to adopt it, and give you traction and feedback, so that you get going, keep developing your MVP or product, and get traction. And of course, you size the market as well. So these are the buzzwords: total addressable market, serviceable available market, serviceable obtainable market. So these are buzzwords, but the key word here is TAM. You should be able to calculate TAM. I've seen a lot of startups who actually just come up with a business plan or a pitch saying that we are addressing a $1 billion, that with a big B, of a big $1 billion market problem. And even if we get 1% share of that market, we are fine. So that is not actually it works. So nobody is going to take that argument. And all these institutional investors and all these matured investors never want you to come up with this kind of a top down approach, a very high level top down approach. You need to work bottom up. You need to come up with assumptions. You need to show the calculations, what market you are targeting at, among between within that market, what are the segments you need to segment. These are the exact customer personas that I'm targeting at. And TAM is nothing but number of users that you're targeting into the price per unit that you are actually charging them. So this is a very important exercise that you need to do, and you will be able to do it well when you are building this business plan canvas for you. And then of course, then we'll be looking at these important aspects like channels. So what will be your distribution channels, how you will do your customer acquisition, how will you do your marketing and sales. So you define all this in your channels. And then of course, the most important aspect that you need to look at is what is your unfair or competitive advantage as compared to your existing solutions, existing alternatives. So you need to do deep dive, and you need to do SWOT analysis to understand your strength, weaknesses, opportunities, and threats, and define it in a manner that your investor is actually confident about your team implementing this solution. So these are the initial steps that you need to take. And while building your business plan, of course you need to have a future roadmap as well, in terms of what milestones are key for any startup, in terms of what are your milestones for the next 18 to 24 months. I want to kind of do these many trainings, I want to reach out to these many people, I want to open shops in these places in the next 18 to 24 months. So you have a well defined rollout plan. And then of course, when you have developed your business model and your your business plan, and you have rolled out you've captured your milestones, then of course you need money to implement that plan. And that's where your financial model comes in, and that's where your funding ask comes in. So you need to have a roadmap with milestones. What is your milestones in of your operations, where you're wanting to launch, where what all you're wanting to achieve for the next 18 to 24 months. That is the most critical timeline. Next 18 to 24 months is what investors are looking to invest in one tranche or one round. And they're wanting you to have kind of course, a very high detailed visibility into the next 18 to 24 months. And that's how you build your financial model, and then that's how you ask for funding as well. So we've captured what you need to do as first steps, we've captured what you need to do with your team before you reach out to your investors. And now we have done all this great work, we've done all this homework, and now we are trying to reach out to investors. And how we capture all that hard work, all our vision of problem statement, where we are wanting to go take our product and company to the next level, where what are our overarching goals and objectives, and the impact that we want to create in the society. All this is captured in a great story in a pitch deck. So that is your most important document that you utilize to reach out to your investors. So that the elements that we've discussed till now, they help you build a great stellar pitch deck. And of course, within pitch deck, as a backup document, you need financial model. And for further conversations with investors, you need to have a financial projections model. So to translate all that story and implementation into how your revenues are looking like for the next 3 to 5 years, what are your cost elements, how your product development is happening, and why do you need the funding that you need. So we are coming to the most important of aspects of reaching out to investors now, which is pitch deck. And pitch deck is nothing but, like I said, it's great storytelling. And for to tell the story, you need elements of of the hard work that we have done till this point in time. And you will take all the elements, and all the concepts and all the information that you've laid down in your business plan. So this is the overall structure. That's the best practice, I can say, of developing a pitch deck. So you need to have a problem solution section first of all, where you cover you have a cover slide, and then you articulate your problem in very easy three lines, very clear, concise, and very they are not open to any arguments. Those are real problem statements faced by a certain set of humans on earth, or animals, of course, if you're wanting to solve in any segment. So problem statements need to be defined very well in just 3 or 4 lines. And then of course, against those problem statements, you come up with the unique solutions that you're coming. And then of course, the solutions are provided through a product or service. So then the next section is the product section. In the product section, you just introduce your product. You can include like a 1 minute 1.5 minute demo video, MVP video in the product section. And you just list features and benefits, and also the business model is also very important. What is the business model that you're looking to to work on while providing the product or service, and the traction that you're getting. So this comes in a product section. And then of course go to market section is very important, because you need to have clarity. What is your customer acquisition, marketing and sales plan? Because any investor would want you to have, that you as a team have well thought of, what market you're looking to target, and what is your plan to do marketing and sales, and what are the customer segments you're looking to reach out to. And then of course, as an investor, I would want to see what is the market size, what is the opportunity that I'm looking at before I invest my funds. And then no idea actually goes without competitors. So you need to do research and find the most relevant competition for you. Some of them might be leaders in the space, some of them might be startups like you, and you need to kind of place yourself where you are in that grid. There be leaders in the place, there would be old companies in the place, and you are actually coming up as a challenger, and you are wanting to be a leader in this space. So you have to spell that out in the competitors section. So competitors, your unique advantages, why you are above the competitors in terms of tackling this solution in this particular way. You are, of course, everybody says that they are the best and they have a unique advantage, but you really need to tell that for example, in my and Utsav case, Utsav can actually say that he has the experience of working in the wealth management industry for the top banks, and the insights that he has is, it's very rarely people will have those kind of insights, because he's got the opportunity to work in those companies and with those kind of clients and those kind of segments. So that is the unique advantage that you need to spell out. And of course, as a team, so now coming back to our practical example, like me and Utsav coming together, so we'll have to articulate that what are the competitive and unfair advantages we have as a team, and what is and why we are the best people to implement this plan. Utsav, any thoughts on you in terms of unique advantages and team, and in the competitive section? Because I know that you've worked really well while we developed our page deck, and this section, you were able to highlight the unique, and I might say unfair competitive advantage that our team has. So how do we spell
Sure.
that out?
Okay, thanks, Nakul. I just wanted to highlight a few things. As you rightly said, that it is very important to have a core team in place. I believe, it is very important that the core team comprises of two, three, four people, and each one of them comes from a different background in terms of varied skill set. However, at the same time, not to, it is very important for each one of them individually and collectively for the team to believe in the philosophy of the proposition. I believe having you as the service provider and me represent coming from the wealth management segment, where we aligned and where the synergies developed primarily was because we felt strongly about the inefficiency which is already there in the market, which is biased advisory, as I said. And we, for both of us, feel very strongly about the philosophy of true blue wealth advisory without any bias to the clients across various income brackets. I guess that's one of the key areas that we were looking at. Now we build upon that. I have, having worked with three top banks of the country, and globally represented, very well represented across various geographies. And at the same time, I happen to have interacted with my colleagues who work in various geographies. So that gave me an understanding that what are the various the clients across want true blue wealth advisory, and at the same time which is suited for their requirement at an optimal cost. And where having you as a coming from the startup background, where it helped was because, one, we felt strongly about the proposition, and two, you are extremely passionate, not just as a startup advisor, as a strategy consultant, but also you have been you have been managing investments on your own for a very long time. And I believe the synergies developed where we connected beyond the scope of the proposition, having to understand and interact that what are the different mindsets, we identified the market not just in terms of income bracket but also geographies, but at the same time looking at the market size top down rather than as a bottoms up rather than a top down approach. I believe as you mentioned somewhere previously that it is very important to size your market. We sized our market not just in terms of geographies but also in terms of income brackets. That gave us an understanding and appreciation that what are the various flaws within the ecosystem and how we plug those. So we started working on those ideas organically. The conversation went beyond the scope of work and how what are the differentiated value offerings that we can offer as a part of our proposition robofolio in the go forward plan. So these are the various aspects that we looked at. The pitch deck that you and your team prepared, Pride Diligence prepared, that I forwarded to my innovation arm of my firm, and they vetted the valuation model, the pitch deck model, and they came back with very positive reviews. So having a team with different skill sets helps to bridge the gap in order to bringing us closer to reality in order to get funding at various levels, various stages of venture capital, which we'll be sharing in the next few
Right.
over the course of
Prachi,
this conversation.
right. Prachi, do we have 5 minutes? We'll just wrap it up in like next 5 to 10 minutes, if that's okay, or are we have we spilled over too
Yes, sir.
much?
You can take 5 to 10 minutes.
Okay, sure. So, Utsav, we will have to wrap it up in next 5 to 10 minutes, but I think
Sure.
we've covered meat of the topic, and this is a very important point that we wanted to drive home was the unique advantage that you need to spell out as a team. Having you as an industry leader, working in the wealth management space, you had the insights and the knowledge that was, of course, a unfair advantage or a unique competitive advantage for us, and that really got us those investor conversations, and those appreciations, acknowledgements that we received wherever we had the conversations around
Right.
wherever we pitched our proposal.
Of course.
So just coming just wanted to highlight one more important point in the product section. I mentioned business model. So it's very important for us in any startup to spell out the business model very very crisply and very clearly. It could be as simple as we are like Robofolio is RAS model. This is SaaS, but it's a
Robo
robot
advisory as
advisory
a
as a
service,
service.
yes, which is a
So we
subset
so
of
very
software as a
yes.
service.
Yes, so we very clearly kind of spelt out that this is a business model in terms of this is a subscription per month that per customer that we are going to charge, and another business model we had was the enterprise business model where we clearly spelled out that we'll be actually charging 10% of the revenues that is generated through our app. So I'll very quickly I'll show you the actual presentation. It's still a work in progress presentation, but the actual presentation that we worked on, which actually helped us get actual investor interest and conversations. So this is the work in progress pitch deck that we worked on. So we worked on vision and mission. We spelled out a problem clearly in this slide. We presented our solution, and we presented, of course, in terms of our product, we presented our conceptual model, and we conceptualized the user journey of our product, and the features that we wanted to present, and then we, of course, did our research and sized the market in terms of India and global markets. And this is the slide that I wanted to show in terms of business model. So we had a B2C segment and we had a B2B segment, and see how clearly we have kind of spelled out a business model. This subscription based business model could be as low as $10 per user per month, and the B2B business model is 10% of the revenue generated through Robofolio app. So and this is the competitive landscape. So because we are discussing the pitch deck slide, this is the most important slide I wanted to cover before we wrap up. So I just wanted to show you the actual pitch deck that we're working on right now as we speak. And these are the different segments that I've spelled out on the earlier slide, and you can see how we've kind of articulated our pitch deck. And this is the business model that we have presented, the competitive landscape that we presented, and where we are, and what is the competitive advantage that we have a future roadmap for the next 18 to 24 months. And why are we looking to raise 1.5 million, and where we wanting to utilize those 1.5 million. And these are the financial projections we kind of made for a certain investor conversation. And we've kind of also captured various milestones, and various traction elements that we've witnessed through this short journey till now. So this is what we wanted to present, and you'd actually utilize this pitch deck. You'll make a pitch deck, and you'll make different variations of this pitch deck. A very abridged variation could be used to send out our emails to have the initial conversations with the investor. When he's interested, he'll invite you for a deeper conversation, and then you can take your more elaborated pitch deck. But again, your even more elaborated pitch deck will not run beyond 15 to 20 slides. You can always connect with us to understand better about the best practices of creating a pitch deck. We'll be happy to help you in terms, you or your clients, if they need any pitch deck development or financial model development. And so these are the best practices. 15 to 20 slides. These elements that I've covered should be there. These are the standardized and best practices considered by all globally by all the top investors. And this is how you initiate the conversation. This is how you articulate your story and the work that you've done and the vision that you have for your company, and you're wanting to go to the next level. You're wanting to scale it up, and that's why you need funds. And you are actually presenting your startup as an opportunity to the investor, because see, please understand that even investors are looking to invest their money to get in great projects, to get great returns. So present them as an opportunity, that you just not just come from a place of just seeking funds. You come from a place of confidence that you're creating a innovative solution, or you're addressing a huge problem that has huge potential, and you're confident about your product and service. And that's how you're reaching to the investors to have those conversations. If they are wanting to be part of the team, they're wanting to be part of the success story. And that's how you should approach it, and have confident conversations with the investors. And they will also appreciate your effort, your knowledge, and the problem statements that you've figured out, the solutions foremost that you've kind of come up with, and how you're implementing them. And that's how you are able to convert those conversations into successful funding rounds. So this is what I wanted to cover. What we jointly wanted to cover in this session, Utsav, overall. And now I think we are open. We're open to take any questions that the audience might have, or any concept they might want us to go back and dig deeper into. We're open to that. Over to you, Prachi.
Sir, we don't have any query from the audience right now. So we'll
Okay.
conclude this session here only. So thank you, Nakul Saluja ji and Utsav Pathak ji, for giving your valuable time to us. The collab of knowledge you both share with us add up to this 14 days webinar MahaKumbh. So thank you so much for that and being here. Thank you, sir.
Thank you so much, Prachi, and thanks, Utsav. I think this is the end of our session, and anyone who's actually wanting to reach out to us can reach out to us on these coordinates, and we'll
Sure.
be happy to help our fraternity and and their clients for any work related to any
Of
advice
course.
related to startups. So
Sure.
thank you so much, Prachi.
Thanks, Prachi.
Thank
Thanks
you.
for your
Thank you,
time.
sir.
Thanks, Nakul.
Thank you. Take care.